All right, hello, welcome everybody. My name is Dr. Terrence Duncan, and this is going to be a recorded webinar. We are celebrating Realtist Week, and we're going to make a focus today on Monday about renovation loan strategies for investors. We will have representatives for USA Mortgage that's going to take part of the conversation and the presentation. You can put your questions in the chat. And then we'll be able to respond to that either real time or at the conclusion of the webinar. And so this recording or this webinar will be recorded and it'll be made available for those who are either able to be on the recording or is looking to get the recording information later. I'll also be shared on our Facebook page, Metro East Realtors Collective. I am your president. I am the president of the Metro East Realtors Collective, Dr. Terrence Duncan. And for those who are not familiar with NARAB, what we do is that before we start anything, we do lead in prayer. So if you don't mind bowing your heads if you're able to. Dear Lord, we come here today as we are looking to be able to learn more about the real estate process, how we can better serve our communities. We are grateful for those who are not only able to participate, but for those who are also doing the webinar content. We pray that the information that's provided is provided amongst our communities near and far, so we can continue to move forward with our mission, which is democracy and housing, and providing economic empowerment for the communities that we serve. In all this, in Jesus' name we pray. Amen.
Amen.
All right, it's time to get to it. Okay, I want to be able to introduce our presenters. I'm just going to go, excuse me, a brief overview of the webinar, just some general points, who we are as an organization for those who are interested in joining the organization or refreshing for those who are members for our organization. I'm really excited about this because this is our second webinar we have provided within a couple of weeks for those who are interested in real estate investing, or for those who are looking for renovation loans, or even first-time home buyer products, or even if they want to get another home, vacation home, whatever the case may be. We want to be the one-stop shop for those in the Metro East area to come to ask us for questions, especially for those in the minority community. We understand that access has always been there, but the connectivity to access has been a challenge. And it is our hope and an extreme wish that we provide that access to those communities for those who could benefit from the information. I wanted to introduce Laura Taylor. She's the Chief Credit Officer for USA Mortgage, as well as Danny Plock. Is it Plock?
Yep.
Oh, I got it right. Look at that.
Nailed it.
Chief Credit Officer with USA Mortgage. They're both phenomenal ladies. I've had a chance to meet them several times before. I'm really excited about the material that they're going to share and also the expertise. And so for those who are not, again, familiar with what we do, hopefully you can share that, this particular organization is here and willing to provide the resources necessary to achieve whatever your objectives may be in home ownership. So quick agenda, we're going to cover three main points. We're going to look at the understanding the basics of a renovation deal. We'll also learn the main types of renovation financing, and we're going to discuss residential loan products by USA Mortgage. Just as a FYI, we're just going to have a broad overview because obviously when you're looking at some of these different ways to get your products financed, that's more of a deep dive. And, as the year goes on, we'll provide future webinar content for that, but this is a great way to get the second quarter going for 2026. For those who are unfamiliar with us, we are the Metro East Realtors Collective. We are a chapter, one of 100 plus chapters in the country under the National Association of Real Estate Brokers. We have been in operation since we started off in 2024, but we were officially sworn in and chartered as of February of 2025. We serve the entire Metro East communities, and our mission is to focus on Black homeownership and economic empowerment. We also are not just pigeonholes into that particular silo, as we want to work with all individuals who are interested in advancing efforts for affordable housing and wealth generation. The National Association of Real Estate Brokers was established in 1947 due to lack of access for Black realtors. It is the oldest minority real estate trade association in the country, and as noted, it's 100 plus local chapters. We're in 35 states, and there's 18,000 members plus throughout the United States and U.S. territories. We also have members overseas in Africa, as well who actually do come to our conferences and conventions to learn more about how to advance democracy in housing. Our members are known as a Realtist, and it's singular as it's pronounced, and we consist of real estate professionals in our affiliates, which are those who are interested in the real estate space as well as economic empowerment. So we also work with nonprofit organizations. We work with different stakeholders such as universities, junior colleges. Obviously, we work with lenders, banks, insurance companies, title companies, the works. And so we work very hard to be able to advance these efforts. Excuse me, and then there's a website, www.narab.com. One thing to keep in mind is that today is Monday. We are in the middle of Realtist Week. And Realtist Week, for those who are not familiar, it is the Super Bowl of real estate for us. And so throughout the country, 100 chapters plus, we are celebrating Realtist Week in various ways. And so for those who are watching this in the St. Louis area, our St. Louis chapter is currently doing a tour throughout St. Louis to look at different developments, housing, and just really get a chance to fellowship. Yesterday, we had a faith service and a community day at Impact Church STL. Again, as noted, please follow us on our Facebook page because we have several other events going on the rest of the week. Starting tomorrow, we have Women in Investing in Real Estate downtown St. Louis tomorrow from 1 to 3. We also will be doing a water distribution on behalf of the residents of Cahokia Heights. And then Thursday, we'll close out Realtist Week with a business networking event at Jazzy 159, owned by one of our charter members and Realtist, Anthony Bond, Thursday from 6 p.m. Until. So here are just some of the membership characteristics. As stated before, we're real estate brokers and agents, loan officers, mortgage brokers, title companies, developers, insurance professionals, as well as small business owners that are not involved in real estate. And I just really want to emphasize that because I know that the majority of the language that you see is thematic towards real estate, but you have to understand that homeowners and business owners, homeowners are also business owners, right? And so we want to be able to ensure that we're helping them not only with their current residents, but also with an opportunity to acquire different residents as well. Or even if it comes to commercial real estate, we have solutions for those as well. So if you're a small business owner and you're looking to find a space where you are want to get a little bit closer to these resources, we like to argue that we have that opportunity here in the Metro East. So now we're going to cover the funded types for real estate investors. There's obviously a lot of different products, but we're going to just focus on several key ones that typically come about based on your investing needs. And this is for the investing side of the house. For those who are looking to acquire real estate for rentals, the first is DSCR, which is debt service coverage ratio. USA Mortgage is going to go more in depth about their line of products associated with that. This is for short-term rentals as well as four doors. So fourplexes, duplexes, single families, they're qualified for that. And again, I'm not going to go in depth too much about what that is for the sake of time and to allow our presenters to be able to provide their content. Hard money, private money. The words are pretty much interchangeable, but just keep in mind there's more risk, higher interest rates, and you have to understand the terms. And also you have to read the contract. You should read the contract regardless of where you are in real estate, but you have to be familiar about the terms and the arrangements associated with hard money or private money. And even if you're on the equity side of the house, you're looking at private equity, you have to understand what you are possibly giving up and what you're foregoing to be able to move forward in a real estate transaction. SBA loans, they can be used for acquisition of property, mixed use. They also can be used for startups, depending on the scope of the project. And we like to call in the business world, SBA funding projects. That's the way they view it. They rate and score your project based on certain criteria. But if you're looking to acquire a childcare center, or if you have a mixed use office where you have, rental units as well as a commercial space, like a small event center, which you kind of see in St. Louis or maybe downtown Collinsville or downtown Belleville, you could use an SBA loan for that particular type of mechanism. If you wanted to buy a franchise, for example, if you want to buy a Jersey Mike's and you have the net worth and all the other liquidity requirements, SBA loan could be utilized for that particular approach. Alternative funding, this is where you can work with a business loan broker, where you're looking at fix and flips, the BRRRR, where you buy, rehab, refinance, repeat, or reinvest and repeat, various commercial funding strategies, and similar like an insurance broker or even a auto loan broker, you're just working with the individual or a company that are helping to try to find the best product and package your deal and advocate for you to try to get funding. All these different lenders, whether they're local or regional or even national, they have what they call different credit box requirements. And so, again, working with a broker can help identify as to whether or not to move forward. And we try to look at local first because we like to support small businesses in the area. But if we have to go outside, the requirements are going to vary, but you're still working with the lending institution for all intents and purposes. Bridge loans, you can use bridge loans for the investment side of the house, and this is where you could provide or be able to receive a loan to help cover a project where you're in the middle of fix and flip. You have a pretty good ratio associated with it to be able to get the funding, and you create a bridge. It's a short-term lending mechanism. It's almost equivalent of a line of credit, but you have to keep in mind of the interest rates associated with it and also the terms. And the requirements are a little bit stringent, but it's what such as the credit score and your experience and how many exits that you have on paper. But it is a viable product for those who have been doing fix and flips for an extended period of time. Here are some key terms to hold. One of them I did not add, I forgot to add to it this morning, was non-qualified mortgage. And so what a non-qualified mortgage basically is, on the residential side, you do get a regular mortgage on a particular property. Non-qualified mortgage, the terms and the conditions to move forward on that varies. And so these products that I had provided earlier are not considered non-qualified mortgage. And USA Mortgage will talk about that a little bit more on their side of the presentation. And so the key terms are loan to value, which is their loan to current market value, your loan to cost. This is the percentage of total rehab cost, including the purchase price and the estimated cost of rehab, and ARV. So this is your after rehab value, and this is your estimated value after renovation. So this is a great part where you want to look to see what are the comps. This is where you want to come to the Metro East Realtist Collective because we have experienced professionals that can be able to work with you to help get a good estimate for your after rehab value, so you can make a very sound business decision as to fix or flip a particular property because you do want to have good profit margins at the conclusion of the exit. And so again, working with one of us within the organization, or actually multiple people within the organization, could be a good value add as part of your team in your decision making as you move forward in renovations. The general requirements on the business investing side are for the rental side and for those who are interested in fix and flips, et cetera, include a proof of business entity such as an LLC, a corporation, a trust, or something in that regard. Sole proprietorships do not qualify for commercial lending products. They have to have a business entity. There's a lot of legality for it. I'm not going to get into it, but such proof of entity is just basically showing your articles of corporation, who are the officers, and just other content, maybe proof of registration with the Secretary of State. But you have to have that available as part of your packaging. You have to use a business checking account because if you're getting a commercial loan product, you have to be provided into a business checking account. They cannot provide it into your personal checking account. And then if you also need a business checking account, we do have sponsors that we work closely with that do provide pretty good coverages as well as good terms. And so we can provide that connectivity to well as well. Bank statements or tax returns. Sometimes you might need both. So depending on the size of the loan, who you're going to, again, your lender or broker can help you understand what may be applicable for that. But basically, you want to show proof of your revenue that you're coming in for your business, or if you have the money into your business checking account, and then also tax returns, and that's used for a variety of purposes to gauge the analytics for underwriting criteria to see if you have met the core criteria to meet the lending. Appraisal is important because lenders like to have an idea of how much the property is going to be valued at the particular time of purchase, or at the time of close, if you go to a fix and flip and convert that to an amortization loan, and then updated photos of the property. And so when you're going to a lender, USA Mortgage, you're going to SCB Banks, you're going to, somebody within this organization, you want to be able to provide updated photos of the property, especially if you already started the rehab process. Some of the areas, if you're buying distressed properties, if we go online, if it shows just a distressed property, it looks like there's a lot of work to be done. So the more where you are currently on that particular path, and then having the photo documentation or the current appraisal of the property can really help expedite funding. Of course, the financial statements, again, size of the loan, lending preferences, estimated comps, working with one of our realtors can help you identify how to get the comps for you to make a sound business decision, and then rent rolls. And so for like investment products such as DSCRs, if you're acquiring a property that already has renters in there, you want to show how the property has been cash flowing per door. What is the rent? If you have any leases. Same thing, even if you're acquiring, a business property with an SBA loan, you want to be able to show the leases. Like if you're trying to acquire a strip mall and it has seven units, you want to get the lease as well as proof of the revenue that's coming in for those units in that particular strip mall. Your projected timelines is needed as well. So if depending on where you are in the process, if you're starting off early in the fix and flip process and you're doing a renovation, what is the detailed timelines? When is your projected start date, end dates? What are your milestones and what are your deadlines? And I always say, what is the methodology? What is the basis for you to say how long it's going to take? And typically for those who are very number savvy, I would always say add 25% to your project and your schedule and your scope timelines, just to ensure that you have an adequate reserve. And that really communicates to the bank that you did take any kind of mitigating risk to consider relative to the renovation of your project. Site visits and scheduling may be required. And so some lenders may have a preference to go see the visit or to visit where you're trying to rehab. Sometimes the photos doesn't do it. So you want to make sure that you have your site visit scheduled. Contingency planning, that's where risk management occurs. Did you get your zoning permits? Did you do all the small administrative tasks associated with just moving forward with a renovation loan or a risk fix and flip project? And then finally, what are the prospective penalties and bonuses upon completion? If you are doing ground up construction, or if you are working on a very extensive rehab, are you providing penalties? Or, I mean, are you going to deduct any money from the final contract with the contractor, or are you providing bonuses? And so it doesn't happen a lot with a lot of smaller fix and flips, but if you are looking as a more savvy, more experienced investor, that's pretty good to have on standby as well, because again, that's tied into the risk management aspect of the project. Insurance coverages is important as well too. You want to have risk management and making sure that you have the adequate insurance. And again, within the Metro East Realtors Collective, we do have several individuals who work on the insurance side of the house, and we can help you attain coverages, including landlord coverage. So if you are going to have somebody stay in your property, having appropriate landlord coverage is similar to professional liability to protect you and your interests associated with that particular property. A vacant policy. So if you are buying a distressed property and you're doing a renovation, having a policy on that particular project is necessary. Builder's risk, and this is where you are covering, making sure that you're protecting your interests in the event that the builder or the contractor either A, does not have an adequate coverage on their certificate of liability, or if you just want to have that just as a value add, just to protect yourself in the event that something else may go wrong. And then you want to have replacement costs. So having a functional replacement cost is important because if something happens to your property and the property is distressed, if you don't have the replacement cost coverage in there, then if something happens, like for example, the tornadoes that happened last year, you may not have enough coverage available to replace the amount of the damaged property. So in conclusion, before I turn it over to USA Mortgage, why work with the Realtist? Again, we're just a concentrated network of resources. It's our professional expertise that's there. And if you look in this picture, you're seeing a wide variety of talented individuals that's been in real estate for 20 and 30 years. You have lenders, you have investors, you have small business owners, you have influencers, you have small business experts, you even have a college professor in the mix, right? And so it's what we do. We're actually passionate to be able to provide these set of services to you and for those in the community. So please get the word out. We really appreciate you taking the time on this day to listen to this particular webinar. Advocacy is also important too. We work closely with not only the other chapters, but our national organization, but we have the flexibility to work closely with city governments as well as at the state and federal level. So we have, throughout our brief inception, since 2025, we have met with Senator Duckworth. We have also met with, Representative Kevin Schmidt's office. We have also met with the mayor of Alton. We have maintained communication with the city of East St. Louis, and the list just goes on and on. So we just want to continue to build relationships and just show that we are not only about business, but we're also here for you. And so now I'm going to turn it over to the next part, and they'll go ahead and close everything out. But we're going to look at residential loan products with USA Mortgage.
So I'll start off on this section. Thanks for having us from USA. I'm going to go over the DSCR on the residential side. So although these are considered non-QM, this would be for anything that wouldn't be commercial. So anything from a 1 unit to a 2 to 4 unit could potentially qualify for the DSCR loan. What's nice about these is they're not looking for the traditional mortgage approval. So you don't need your tax returns and bank statements and pay stubs and all of the stuff you need on a traditional mortgage. They're really looking to say, okay, what does this property rent for? And can that rental amount cover that mortgage payment? So that's the most important thing when it comes to doing a DSCR is what it can rent for and can it cover that mortgage payment that the borrower is going to have to make. So typically with these, they're looking for the borrower to put anything anywhere from 15 to 25% down. You're going to take that rental amount and then you divide it by the PITI payment and if there's any association dues. So that total payment, you're going to divide it by that and then you get a percentage. They're looking for that ratio to be at least 1.25. We have some, because we have multiple investors that offer the product, some that may consider it at 1, but anything under 1, we're going to get kicked out. We're not going to be able to do the loan. So they're looking for that debt ratio to be at least 1 or more, meaning how much you can rent it for, divided how much that total payment is with taxes, insurance, and everything. It's typically an interest-only payment. Our minimum loan amount is $75,000. You can do a purchase. You can do a cash out refi on these products, as well as closing in an LLC. So pretty simple all in all on how to get it together and qualify it because you're not dealing with all their traditional paperwork. It's really just what can this property pull in rent wise. And with this loan, you will need to get an appraisal. So it's a great way for you to capture investment properties and keep them without having to show all your tax returns and all that stuff. The next slide just kind of goes over a quick minimum. Typically, they're looking for at least a 640 credit score. Kind of mentioned that LTV already, and we can do loans up to 2.5 with a minimum of 75,000. You can go to the next slide. Went over cash out refis. You can do single family residence, PUDs, townhomes, 2 to 4 units, condos, non-warrantable condos, 15-year loan, 30, interest only, ARMs. They have a ton of different products as far as how you would want to stack that payment.
Can you go over quickly just what non-warrantable condos are for those who may not be sure what that is?
Yeah, so condos are a great topic these days. They just seem to keep growing in what's needed on them. So a non-warrantable condo, there are certain guidelines that a condo needs to meet in order to meet Fannie and Freddie, FHA, USDA guidelines, which is our QM lending side. So there's several different guidelines that need to be met to make it warrantable. If it doesn't meet those requirements, then we would flip it over to this non-QM that allows non-warrantable condos that would take one of those areas. Like, for instance, we're required to get a copy of the budget. And if there's not a 10% allotment going into a reserve account each month, so when you look at that budget, if 10% of the money coming in to the association doesn't move over to a reserve account, then it's considered non-warrantable and you would have to flip it to the non-QM side. So that's where this is helpful to be able to leverage these non-QMs for non-warrantable condos because we're seeing more non-warrantable condos these days. And rental opportunities for condos. So you could do this DSCR, do a non-warrantable condo and not have to get all the traditional paperwork you would on that QM side.
Thank you.
You're welcome. So with the DSCR loan, you're able to get a gift for the down payment. Notice I mentioned anywhere from 15 to 25% down. That could be a gift. That can be a portion of your own funds. You can get up to a 6% seller concession. Foreign national income is allowed, or a foreign national borrower is allowed. That's actually the first fix and flip I ever assisted with was someone that was a foreign national that was just buying properties in St. Louis, or sorry, I said fix and flip, I meant DSCR, that was buying properties in St. Louis, doing different products and purchasing these to rent them out and doing a DSCR loan with them. You can close in an LLC, and typically the ownership seasoning needs to be anywhere from 0 to 6 months for the person you're selling it from or buying it from. Go to the next slide.
This is where I'm gonna go ahead and share the
PDF.
PDF. Yes, ma'am.
Before we go into, I don't think a slide got put on here, but you mentioned the fix and flips. So I just wanted to let you know that there are opportunities to do the fix and flip on the residential side as well that would not be considered a commercial loan. And when you do them on the residential side, you don't need an appraisal. You don't need the standard documentation like any income docs at all. They're looking that the borrower has $30,000 in the bank as liquid reserves or funds in order to fall back on. We can finance up to 100% of the acquisition cost and rehab cost added together. Pretty flexible on credit. They want you to have good credit, but it doesn't have to be great credit, as how they put it. There is no prepayment penalty. You have 6 to 12 months to finish the fix and flip project, although they will extend if you need to. It's interest only payments. You can use a line of credit, meaning if you get qualified up for a, let's say, $500,000 fix and flip, you could buy multiple properties within that $500,000. Obviously, you fix them up, you flip them, you sell them right away, and you get that profit. So that's also another great opportunity for non-commercial fix and flips that we can offer as well.
Awesome.
And we'll roll into Danny, and she's going to go over renovation loans.
Yeah. So I think that I'll give you just the tips that I think are nice to have in your back pocket, and then let you know that we're here to really communicate, and we'll jump on calls with contractors and borrowers and agents. The number one, I'm going to say, quote unquote, issue that I've found with renovation loans is lack of communication. There are a lot of parties involved in one of these transactions, and 9 times out of 10, where things break is because we haven't communicated effectively on the product. So what we like to do at USA Mortgage is make sure that we're having the conversation between all parties up front. So that way everyone understands the process, understands their role in the process, and keeps people comfortable moving forward with the figures. So typically, when you think renovation, I think 203K comes to mind. That's the FHA renovation product. And when we go to the second page of this in a minute, we'll break out the options that we have, because it's more than just an FHA transaction that's available. but the process is the same amongst all of the products. Essentially, what we're going to do is we're going to have somebody that's interested, right, in a potential renovation. If even if they don't have a property identified at this time, but they know that they're going to be looking in a market that has homes that need a little love, we can get them pre-qualified for this and establish a budget. So typically what happens though is we'll have somebody who's out shopping, they're pre-qualified for traditional financing, and then they'll find a property that they love that just needs a little bit of fix up. The nice thing is that there's really no minimum to the transaction. So typically we'll see 5 to 10,000 at the low end of a renovation project, but they can go upwards of hundreds of thousands of dollars depending on how much is needed. So when we establish that, we're talking with the contractor first, we're talking with the borrowers, trying to set a budget to determine what work needs to be done. I think that Dr. Terrence mentioned it before, is that you're going to set that budget, you're going to set that timeline up front, and that's a big part of that communication. So once we kind of establish these guidelines, then we go into the specifics. So once a property is identified, we know what work is going to be done. We're going to order an as completed appraisal. That appraiser is going to go out to the property, and they're also going to take a look at the bid, the budget, and they're going to estimate what that value will be once all of the repairs are completed. That's how we're going to establish how much financing can be done. From there, depending on the size of the project, we might loop in a HUD consultant. Really anything over a $75,000 budget would need that HUD consultant. And really it protects all parties involved. Make sure that the borrower is protected, that the work that is expected to be done and is done timely. Protects the lender to make sure that we're staying on track, we're keeping the project moving forward, and protects the contractor as well because they have another set of eyes on what's happening with the project. Now, from a process perspective, we're doing all of these estimates, these hypotheticals, these as completed reviews during the loan process, and we will get somebody qualified. Now, work doesn't start, funds aren't released until we close on that loan. So once we close, that draw process will start afterwards. Now, we can do a material draw. So funds sent to the contractor and borrower for materials, and it's typically around 50% of the materials needed for the project can be dispersed at close. That helps the contractor get started, but the nature of a renovation loan is contractor is paid on work completed. So as work is completed, they can make a draw request and then funds are released. And that's really when that HUD consultant comes into play as well, is that there will be inspections, and we'll determine how many inspections are done up front. But as those inspections are completed and everybody validates and signs off, borrower included, signs off that yes, what was supposed to be done has occurred, then we release funds and the project continues on. So that's kind of a synopsis of the workflow. If you go ahead and go down to page 2, we can kind of talk about some specifics in financing. I think a lot of times, like I mentioned before, we think about 203K, which is the FHA financing. There's also conforming financing, which is the home style and the Freddie Mac choice. But there's also a VA renovation product and a USDA renovation product. Although those two are less utilized because they have a little bit more restrictions on the amount of funds that can be financed for repairs, I do think that the 203K and the home style are our most used. But if you move towards the home style product, you can leverage this for investment properties. So I think a lot of the focus today is on investment, and with minimal down payment, you can see here for a purchase, we can go up to an 85% LTV and finance those funds for repairs into the loan. That it's kind of attractive for something that might need slight repairs to get ready. I've also seen that some will buy a 4-unit as a primary residence and then rehab those other units so that they're keeping that cash flow moving by renting those other units. So we can definitely go into specifics on one-on-one calls if you have anybody interested. Like I said, I think the communication piece is the biggest part to tackle on these. They're very, very similar to traditional financing as far as a timeline, as long as all parties are moving in the same direction and everybody knows their role on the transaction. That 30 days to get these approved and off the ground is very, very doable. So if you ever have anybody interested in these, please don't hesitate to reach out, or if you want to learn more information, we're happy to help. Laura, is there anything else you wanted to add?
No, I think that covers it. Yeah.
All right. Well, thank you, ladies, for the presentation and for the insightful information. As noted on the slide, I will. Oh, you know what? I forgot to go back to the slide. We'll make sure that you get the brochure so you can have that for. I actually shared the wrong thing. So you can have that for your reference. And, like I said, you also have the webinar too, because, so much information, obviously, and there's so many different products, but we feel like at the Metro East Realtors Collective, having those webinars, having it, as time goes on, we're going to build this library out, right? And having that library, people have the opportunity to kind of go back to it and stuff. So it is also good too for our realtors. I know we have several realtors on this call for both sides of the river. I think having that information is powerful as well too, because we can better educate not only ourselves, but we can also help our clients, our prospective clients in a particular vein. And just as a concluding thought, before we go into questions or feedback, this is the contact information for USA Mortgage. Katie Otto, not sure if she's actually on a call. I know she was under the weather yesterday, but she will be our primary. Hmm?
Yeah, I think she's on. She was jumping from one
Oh,
thing
okay,
to
good.
I'm
another.
here.
Yeah.
I've been
Hey,
listening the
Katie.
whole time.
Hello, Katie, my darling.
Hello.
So, Katie, do you want to go ahead and introduce yourself real quickly? I didn't know if you was on a call or not.
Sure, no worries. Let me see here. Sorry, I am on my phone though, so the camera, I don't know if that's how well that's working. So yes, I am VP of Realtor Relations for USA Mortgage. So Dr. T has my contact info on here, and you can reach out to me. I can get you connected with a loan officer, or if you have any questions, I can get you connected with Danny and Laura. So feel free to reach out.
Thank you, thank you. And also we want to give a shout out too because of the fact that USA Mortgage as well as SCB Banks they have been one of our inaugural sponsors. And so we always want to give credit where and their flowers as they're due and stuff. We're really appreciative of them supporting us for not only this year, but as of last year too. And so their sponsorship actually helps not only provide the connectivity to those resources, but it also helps the operations of this particular organization. And so before we wrap it up, does anybody like to have any questions? I'm gonna run through the chat real quick, but does anybody have any questions or comments or anything like that that they want to bring um, you know, to this particular webinar before we close out? Give a shout out to the former past president, Delicia Lacey. I see you. What's going on, man? Okay, well, it looks like we don't have any questions, but I'm pretty sure that if you do need this information, we have it here for you. We'll not only forward you the actual webinar, but we'll also send you the slide deck as well too. So save that into your Google Drive, OneDrive, or your CRM related Dropbox. That's great information to kind of go back to. But we're always here for you, and we give you our contact information. And on behalf of USA Mortgage and the Metro East Realtors Collective and the National Association of Real Estate Brokers, we'd like to say thank you. We hope you enjoy the rest of the week. And as a reminder, we do have Realtors Week activities going on throughout the week. I can't remember St. Louis is fully off the top of my head, but tomorrow, uh, the Metro East Realtors Collective and the Realtors of Metropolitan St. Louis will have a joint wire panel tomorrow from 1 to 3, and it's at the St. Louis Library. And I can't remember off the top of my head where it is, but they also have activities going on Wednesday. We have a water drop off. And so for those who are interested in donating water, or if they want to, shoot me a message, say, hey, Dr. T, I want contribute to get some waters picked up, let me know. I'm going to be taking it to Equity Legal Services Wednesday. And then Thursday, we'll conclude Realtist Week on the Illinois side with our business and networking event. And then Saturday, if you go into Realtist Metropolitan St. Louis's page, you'll see that they have a community day. And that's a joint day as well too. So I myself personally will be over there helping with the St. Louis brothers and sisters to do their community day. So if there's no other questions, I wish you a good rest of the day. Thank you.
Great. Thanks for having us.
Thank you.
Absolutely. All right. Bye bye.